So bottom line is I want you guys to learn why there's a KDA difference, why you guys should think about your taxes differently, what is different in this tax plan that you guys need to know about, because there truly is a difference in this tax plan that is going to affect taxpayers. So one of the things that we do at KDA is we pride ourselves on being tax strategists. We pride ourselves on doing things differently and not just preparing tax returns. Many times when you go to your tax professionals, you are giving your data to the tax professionals. They're inputting that data into their system. And when they input that data into their system, they are just regurgitating out whatever it is that is going to come out from the system. And that's one way that taxes are prepared. Or you can go to a tax preparer that when you give them that data, they're going to analyze your tax information against tax laws that can be utilized during the season to help minimize your tax situation. The third option that you can benefit from is actually tax planning, taking the time during the year to strategically plan your taxes. And one of the things that I say is there are people that make things happen, strategically plan. There are people that says what happened after they get their tax bill, and then there are people that don't even know what has transpired. I want clients to strategically plan, to actually plan to pay their taxes. And the difference in doing that is literally going to be the difference between how much water you can put in a baby bathtub and how much water that's out there in the ocean, out there in Huntington Beach. That's the difference between the tax savings. If you were filling up your sink with water, that's the tax savings you can get when you don't plan. And if you were looking at the ocean, that's the tax savings you could get. So there is a humongous difference between those individuals that actually take the time to think and plan. The other thing that I want you to be aware of is I pride myself on eating and sleeping tax law. I learned tax law before I was licensed to prepare taxes. And so my default is always to go to the tax code, to always go to the law, not go to IRS, not go to anything else, but to also actually go to the actual law and see what does the law say? How is the law interpreting this? Because many times the things that we read on IRS website or the way things are calculated in software is not the way that it should actually be when we are actually doing those calculations. So I try to go to the law and make sure that I am understanding from the actual law. So that's really important that we do that. The other thing that I pride myself on is also being the individual that is on top of the law. So I have been given opportunities to actually present on the news, to write articles for Entrepreneur Magazine. I have been recently approached to write for Wall Street Journal and to break down this information for the layperson. So I consider myself to be the visionary of the firm, and I am currently mentoring my sons to take over that. Two of my sons are licensed as enrolled agents, and one of them is currently in school now to receive their master's in taxation so that we can keep that legacy going for our firm. The things that are really important to you and the things that I really want you to take away is there have been since March of 2020, there have been 6 tax law changes, and 6 tax law updates. Those tax law changes and tax law updates affect you as individuals, affect you as business owners, and the last update and change to tax forms was March 28th. So anyone who filed their taxes prior to March 28th of 2021 may be in for an amended tax return because IRS has just quote unquote finalized guidance on how to handle certain things as it pertains to your taxes. So I want to give you some breakdown on what that information looks like and talk to you about what that means for you. So one of the things that is different this year for individuals, many people received unemployment. IRS came out, the law changed on March 11th to say that 10,200 of unemployment for individuals is no longer taxable for anyone that has adjusted gross income up to 150,000. For 2 individuals, that could be a reduction of $20,400. Many business owners received unemployment under the pandemic unemployment. So those who've already filed their tax returns overpay their income taxes. IRS also came out with allowing businesses to take their business losses retroactive back 5 years. That law recently changed. So many businesses, especially the mom and pops that had business losses, if the tax preparer did not make the proper election on the tax return to take that loss back, then that business owner will not be able to go back and reduce their tax bill and refund money. Something like the R&D credits, where Ron is able to go back and get credits against tax, we are able to go back and reduce prior year taxable income based on businesses having certain losses, being able to take certain write-offs. That is huge for a lot of business owners because in some of the prior years where business is robust in the economy, and then the impact of 2020 will allow business owners to go back and get income reduced and taxes that they would never be able to get. That's one thing. Another item that changed that is really impacting a lot of business owners are those business owners that are W-2 wage earners themselves or have employees. They have come out and said that if you receive the PPP loans, you were not eligible to take the employee retention credits. You were not eligible to take the sick leave credits. And those credits are dollar for dollar up to $7,000 in wages paid to employees. So those business owners who have been able to keep their employees employed, they may have also received a PPP loan, can now take advantage of a $7,000 credit against payroll taxes. So if you have one employee, that's $7,000 in your pocket. Multiple employees, 2, 3, 4, you're talking about thousands of dollars of tax savings back to the business owner. The key is those elections have to be made on your current year tax returns. They have to be made on the current year returns, meaning tax year 2020. And I said election. And the reason why I said election is because you have to elect to benefit from these types of credits that are out there. And if you do not make the election with the filing of the tax return, you will actually miss out on that opportunity. What we have done as a firm, we have held our tax returns. We prepped them the way that they needed to be prepped. And then we did Excel spreadsheets, work papers to analyze clients' taxes to see what method we should utilize for them, what elections we should take. That is not built into any software that you buy as a professional or over the counter. So we pride ourselves on looking at that to make sure that our clients can benefit from that and get those dollars back in the pocket. That takes an extreme amount of time and analysis, but we feel like our clients are worth it because business owners have built their businesses based on the American dream. You can work hard, you can build a business, you can support your family. But in order to make sure that we as a firm are looking at that for our clients, we have to take a different approach and not just take the approach of preparing returns and filing them, but we prepare the returns, we analyze them, and then we choose the best option that is going to be in the best interest of our clients. And then we make those elections, and then we go to review calls and educate our clients on what we've done, why we have done it. So truly, I want you guys to realize that there are so many tax law changes, and whether you're outsourcing the preparation of your return or doing it yourself, I am going to say to you, it needs to be analyzed because there's dollars on the table that IRS is not going to say to you, hi, Karla, you should have taken this credit, or you should have taken the child tax credit and refunded it back, or you should have not applied for PPP forgiveness and took the employee retention credit, or you should have done both. They're not going to do that. So that's our job as tax strategists to make sure that our clients benefit. So the takeaway for you guys today is a couple of things. One, I want you guys to realize you have control over your taxes. Don't just let it happen. Make it happen, because that's what business owners have done. Don't think that there's nothing you can do because maybe your tax professional currently is not able to do something different for you, and that's okay. That's why we have specialists that specialize in doing TMJ. That's why we have specialists that specialize in doing R&D credits. They're the specialists in their industries. And I believe that every business owner deserves more and deserves the opportunity to reduce their tax bill based on the laws. And the law says, and this comes literally from the Supreme Court, that every taxpayer has the right to arrange their affairs to minimize their taxes under the law. And they have no obligation to pay more than what the tax code legally allows.